Now that the FOMC meeting is behind us yesterday, we saw a 75 basis point hike. Let's see what the damage is and what is the outlook for our precious metals, specifically gold and miners. Welcome to myfinancesteacher.org, where we regularly look at a range of assets. And talking about some of the recent trades that we've had, looking at GDX over here, we've had a bit of a partial stop loss below the late May lows, and those partial stop losses were triggered last week. Since then, gold and miners continued down for a while, but yesterday we were lucky enough to re-enter our positions in miners, luckily not that far from the lows for the day. Now, what's the outlook? Well, let's start with a look at the US dollar. So far, it looks like the FOMC meeting yesterday started a bit of a reversal on the US dollar. It's a bit too early to say. So far, the trend is still up, but there are some early signs that the US dollar short-term daily cycle might have actually topped yesterday. Talking about this daily cycle, it's now 17 days long. Usually these cycles last for a couple of months. So in a usual scenario, we would expect this short-term daily cycle to continue going higher perhaps for at least another 1 week or longer. But we are quite late into an old intermediate cycle lasting for 153 days so far. Usually these cycles last for just over half a year, if memory serves well. So given how old this intermediate cycle is, the short-term daily cycle might actually pop and turn back down relatively sooner than its midpoint. That would give us a left translated cycle. Besides, we have seen a few pokes above relatively wide Bollinger Bands, which also sometimes indicate that a bit of a reversal is likely. Another thing here is a negative divergence between higher highs on the price versus lower highs on RSI. This also often indicates that a bit of a trend reversal is likely. But again, the trend hasn't been broken yet, so it's not impossible for the US dollar to go a little bit higher before it turns back down into both the short-term and the intermediate cycle lows. Now let's look at the implications for gold. I see a couple of scenarios for gold. There is a chance that gold has finished its short-term daily cycle low a couple of days ago, but that would give us an unusually short cycle lasting for only 29 days. In that case, as dollar is turning back down, gold will be ready to continue higher from here into a new intermediate cycle. Or the second scenario, given that the daily cycle on gold is still pretty short, perhaps it takes another few days to finish off, perhaps with a bit of softness in gold price over the next few days, as perhaps the US dollar pokes a little bit higher again. That would give us a daily cycle on gold that would be with a duration a bit closer to the average duration. It's not impossible that recent low from mid-May is broken temporarily before gold continues into a new short-term as well as intermediate cycle rally. In that case, the intermediate cycle would continue into the new low, also lasting closer to an average duration of around half a year rather than 5 months. In either case, gold is trying to create a bit of a bottom in the short term and start a bit of a rally in the intermediate term. And from short to intermediate to looking at the longer term, let's look at the monthly chart. Going back to 2011, this huge cup and handle formation isn't broken yet, even though we've seen softness on gold price, especially over the last 3 months. To remind some of you, here's our huge cup that took us around 10 years, 1 decade to build, and a bit of a handle. The positive sign on the handle is that the retrace back down wasn't extremely deep. The retrace came only back to 38% Fibonacci retracement, which is quite healthy. And zooming in a little bit, even though we've seen gold relatively soft over the last 3 months or so, going down into the intermediate cycle low, we don't see any significant technical damage on this handle, especially if over the next few weeks gold rallies a little bit, say somewhere towards around 1900 into the next short-term daily cycle. In that case, the charts would really seem to say that gold is on its way to get back to all-time highs around $2,070 and have another go at attempting to break it. Next, let's look at the gold optimism index, which has reached quite comfortable levels at around 40-41 at the moment. Usually, historically, intermediate cycle lows in gold take place when this optimism index is somewhere around this green line around 30. That was especially the case sliding down into this huge cup formation. In more recent history, especially since the pandemic drops with trillions of dollars being printed, intermediate cycle lows on gold only when this optimism index only dropped to around 50 rather than 30. But in the ongoing environment of 75 basis point hikes, perhaps there is a chance that this optimism index breaks below 40 before a rally into a new intermediate cycle in gold. As I mentioned, in either case, whether the intermediate cycle in gold finish in mid-May or it's about to finish with a bit of an undercut, with a bit of a new low, zooming out and looking at this gold optimism index, it looks like gold is in the process of creating some sort of a low, after which we'll see a bit of a rally, hopefully towards new all-time highs. But remember, nobody knows the future. I simply want to share my opinion with you. In response, tell me, do you really think gold can create new all-time highs, perhaps sometime this year, in this environment of rising rates? Have a nice day. Bye-bye.